where do you think we are in this whole discussion? Are we watching a White House that's doubling down and is trying to gauge how much pain we sustain versus our trade rivals?
I think the big question you have to ask is, are we really going to go into a massive trade war? The answer is no. In a year from now, are we going to still be focused on these issues? And if the answer is no, that means that any headwind to the market right now is going to be relieved, and you're going to pull that back up. So while we hate to, we're uncomfortable with this stuff, I think that we're overemphasizing in terms of market event.
We've been saying rhetoric only for a while now, but Customs is going to start collecting tariffs on July 6th, Tony. When does the rubber start to meet the road?
Well, let's put the numbers into reality. There are tariffs being put on $50 billion worth of goods, 25%. What is that? $12.5 billion impact. How much will the global economy, how much economic activity will there be in the globe this year? About 100 trillion. So looked at from a long-term perspective, the next few years, 300 trillion of economic activity. It's tiny. All that said, confidence does matter, and this could shake confidence. But we believe the U.S. and China will avoid what's called the Thucydides trap. It's named after a Greek historian from 400 BC when he's referring to Sparta versus the Athenian government, the rise of one power facing that of a ruling power. In 12 of the last 16 times in 500 years has led to war. People worried about here a trade war. But we think, seen through Xi Jinping, the president of China's eyes, he'll play the long game and avoid this Thucydides trap, avoid conflict with the United States as much as they're throwing words at each other, the two nations. In the end, there'll be some degree of cooperation and containment of the issue.
Foxconn earlier today came out and said this is not a trade war as much as it's a tech war and a manufacturing war. When you start looking at things like intellectual property theft, which I know the administration is now starting to put more focus on this week, does this become a bigger issue than trade deficits and working out the trade flows?
Right. Well, in thinking about the tech sector, longer term, there is some threat that the government might become more involved. Look at California. There's a proposal now to look at privacy concerns that consumers have. But we see no consensus in Washington on the issue, at least now, before the election. So don't expect the tech sector to be threatened meaningfully in 2018 by the U.S. government.
I think that we have this issue wrong. And I think that we're talking about what happens if these tariffs hurt us, and what happens if we go into a trade war. But what happens if the fact that U.S. doesn't have access to the Chinese market, and that opens up and we get greater access? What happens if, as a result of that, other countries around the world are able to also gain greater access to the Chinese market, and we end up with more free trade? What happens if subsidies of foreign products that are sold into the U.S. Get readjusted, and that ends up being a positive for global trade? What happens if this intellectual property theft, which we all know about, and everyone's known this for a long time, but nobody wanted to fight the fight because it was too unpleasant, and we fight, and the market hates it, and we hate it, and in a year from now, we actually realize, and I know we hate to say this, Donald Trump is probably right on all this stuff, and we're better off, and the market actually rallies on the back of it, and we do get productivity. So I think that the whole debate is on what happens when the downside happens, as opposed to the likelihood that we end up better off.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.